All right, my friends, let's try that again. Good morning and welcome to the Breakfast Club. We'll see if we get that up and running this time. I've had to redo my whole computer stuff, so I've had to reload up my whole system here. So now we're back. I can see we have some audio now, so we should be good. Let's look at, okay, so we've cleared out the high here at the 8:30 open, and we're looking for, I'd like to see this 15-minute fair value gap hold price. Otherwise, we're still sideways, potential to continue going higher. Right now, we've just cleared this low. Created a new swing point. So I'd like to see this low get taken and get some structure break here with a big defined candle that gives us a downward direction. Otherwise, we're sideways right now. Remember to switch over to your new contract, which will be the September contract. Get all your September contracts on now. And then you're looking for see you later, babe. On the, let's go to the 1 hour chart here, 4 hour chart. So Dow Jones. This is a paper trade. Yeah, sorry about that, Tommy. I've been trying to reset my whole office up last night. I had to tear everything down. They finished putting in all the hardwood floors yesterday, and I've been frantically trying to put everything back together again. And I blew my camera out. I put the prongs in the wrong way and it stripped it. So now the camera doesn't work. Then the audio wasn't, it looked like it was working. Now it's not. Now I had to go back out and fumble around with it. Anyway, we got it back working. I'm waiting for a new camera to come in today. So hopefully we'll be back up and running again tomorrow. We'll see how that's working. So let's go to Dell. But thanks for turning up, Tommy. Appreciate it. Thanks, man. So Dow Jones overall, what am I looking for here? I got equal highs. Look at that reverse. This reversal here on the 4 hour. We've had a nice little punch back into it perfectly right here. 16 hours ago. Right at that 9:30 low yesterday. We're tracing back down into the order block. This breaker, I guess it is now. We've got the swing point and we've actually closed above these highs. So I'd like to see that whole price now and start pushing higher. So you can get through this fair value gap to the other side and then this this swing, come back, find some support at that, and continue pushing higher in Dow. And then Dixie. 250, nice. What was your setup? Did you get a nice clean setup on that? 250, that's a nice little return there. Good for you. Okay, Dixie, what do we got for Dixie here? The day, big drop down yesterday. Right into the breaker. Guess we could consider this the breaker here because it's this candle's inside this. Taking that out with all the way through the mean threshold of that candle. Trade it back up into this. I'd like to see is this close in back to this candle's body. The mean threshold of the consequent encroachment of that SIBI inversion, and then peel away. High's been taken. So we've got a run on liquidity both sides now. Here, we still have liquidity above here, and this mean threshold of a breaker here. So looking for more upside, looking for, if we take this order block here and continue going higher to fill the gap, then that will put more downward pressure on the currencies. Watch the consequent encroachment of this wick here. See if we can continue to work through that. That would put us right inside this range. So I'd like to see up to 72. Now we're getting a body break this high. We haven't really cleared out the lows yet. So look for this to, I'm looking for this to return into the optimum trade entry and continue getting shorter. Let's wait and see what we get here. Just hit 50% there. New Zealand dollar. Relative equal highs here still. So if we do get downward pressure on these foreign currencies, a return back into this fair value gap. Now we've got a body trading above here. We still haven't broken a major low on the daily. But we have got this change in direction. Come back, find some support at this fair value gap daily, and then start pushing for these equal highs above us here. Again, keep in mind you can run all the way back down into here. You want to see that at least halfway stay open. That should put you right down at the mean with a consequent encroachment of this daily fair value gap back here, this inversion. So there is the reversal on the 5-minute. Bodies trade below it. Trading back up into it here. You wouldn't want to see it leave here. So optimum entry would be for me right here to go short. stop loss would be just above here. I'm going to put a line there just so I can look later on today and see how that did. And then we'll look for New Zealand dollar, or sorry, that's Australian dollar. See, Australian dollar's failing to make a lower low versus New Zealand dollar's already cleared this fair value gap on the downside. Australian dollar has not cleared the fair value gap with a body on the downside yet. So more support for this to go higher or to go sideways until the American dollar adjusts itself accordingly. Not a setup, you just traded momentum. Ooh. Okay. Morning, Russell. Morning, Abs. Pablo, good morning. Is the sound low again? Dang nabbit. Let me crank this up here. How's that? Crank the mic right up. I'll make sure that's high enough, and if need be, I can go back into another setting and try and get some higher volume for you guys. How's that volume now? Excellent. Fernando, good morning, my friend. It just seems so much, the sound in here is so much different when you take this, how much it dampens the sound down when you have carpets. When you go to hardwood floor, it just seems, everything seems like such an echo now. It's amazing how carpets can dampen the sound in a room. So anyway, Australian dollar, where are we at here? Okay, so looking for upside still in Australian dollar until we start breaking this to the downside. I'm kind of neutral inside here right now. All these equal lows here. If the American dollar does run up one more time and just help these the Japanese yen clear the lows and then start a reversal here. So look for a reversal in the Japanese yen once we take these lows out. Oily oil. Go to the daily here. Let's have a look at this on a grand scale here. Daily, we finally broke this fair value gap here on the daily. We have not swept these lows here yet though, but we've taken all this liquidity, clear it to the upside. Now we're starting to work our way through this daily fair value gap over here. So we've got the 9 o'clock, 9:30 open here now. So oil, I like to see, we're going to get through this little fair value gap and this. See, we've gone from inside here, we've gone from taking this low here, which is what we're looking for the swing. So we've gone from discount And I want to see this go all the way back up into a premium again up here. So in order to get that, we need to get out of this breaker. So I need to see this trade through here, come back, find some support at this, and then start pushing higher. And then I'm looking for the premium array inside that larger range. So we want to see oil start climbing up a little higher here today, get up and through here. So that might take us into looking for a setup on the 1 hour. Let's have a look at 1 hour. What do we got here? So we got a swing here, taking these lows out. Come back to that order block or that fair value gap breaker. We broke through this. So this would be a really nice, because we're running back up into this guy right here right now. So you can look for 78.90. 78.90 is the upside objective for oil right now. And then I want to see it get above that, right in that box there. So we can get above that. If we can get a retracement back into these equal highs here to go higher, that would be kind of nice. Pull the range and see if that's more than 50%. If not, look for a deeper discount into this order block here, this little breaker with a swing point here, last up close candle before taking out this low. And then we have this as a breaker for running out highs if we take this high out here as well. So a nice little return into here would be nice for continuation to the upside, clearing that out and taking that breaker here to the upside. We're just coming into the bottom of it now, seeing a bit of a reaction off it. So I'd like to see that start digging a little higher. So higher in oil, and then a nice little retracement back at 10 o'clock for continuation. Yeah, high, take that little high out, work your way back down, and then start driving back up. So we'll see if we get a continuation here on the upside. Morning, Tim. Been having a great morning, starting to really like inversion fair value gaps after dumps. What's the name of that model? It's called the inversion fair value gap after a dump. I don't know. I don't think Michael has a name for it. Derek would know better than I would. But as you know, it's the only model I really count on a lot. I like to look at that for about, I have about 3 or 4 models that I like to trade, and that's it. I don't have a ton of them. I don't have a lot of the fancier ones. Let's look at, all these are all ETFs I'm still looking at. I want this one to get down a little deeper. Nice. Okay. Banks. Laurentian finally got some lift. Nice. Gold. Turn back in. Fill that fair value gap, or that big gap in price to the upside. We'll see how it reacts off of here now. You want to see it get through it, come back, find support at it, continue higher. Or it'll roll over and start coming back down. We want to clear this candle down here on the downside. Silver, I'm not touching silver. I was up like $100 and some odd the other day, put it into $65 in profit, and I lost $125. It gapped down. It's like, okay. Bitcoin. Let's have a look at Bitcoin. So here's a reversal here. We've taken out these lows. The reversal is quite late in the range, and we have the breaker. We finally traded through it right here. And then the body, next one is we trade back inside it here, and then traded below it. You're looking at 50% of this range. So you'd wait for that to clear that high again. Finally clears the high with a nice decent body. And as soon as we return back into this candle, you can get a long back into the range. And you're looking for this fair value gap here. This one's filling now. You want to see that climb on top of that and get through here for Bitcoin. We have a reversal here. The 8:30 open this morning. Ran right back into that reversal right there. So the inversion fair value gap once again. This is a nice little example of what you're just talking about, Tim. You got these lows that are small below. Inversion right here. Break above with a body. Then look for that candle here as well. So you're looking for an opportunity to get in here or off this candle here. So you trades back to it here, and you're aiming for obviously this order block here, old highs, fair value gap, old highs. You literally would have got in on that, and then all of a sudden it would have opened up and shot straight up. If those were objectives, you would have got hit. They would have, if the liquidity was available to you there, you could have got paid there and there. Came all the way back down into the fair value gap again, and now we're marching back up looking for this liquidity on the downside or the upside. I'd be looking for this liquidity to get taken out here and to start running back up higher into this range, into the premium level of that range. So the next objective after here is this fair value gap and that order block in terms of Bitcoin. Relative equal highs for soybeans. We got to get through this fair value gap on this side though. We've just come up to the top of it. You want to see it push through that, get on top of it. If not, it's going to react off of here and start going lower back into this order block here. Kind of keep your eyes on that. Look for the 1 minute chart. See what kind of support you get there for either direction. Sugar, consolidation, break above, come back, cam model 1 entry for a long. And inside that fair value gap there as well. So that's a nice one for a long. Now this is a daily chart. So you're looking for these highs. They're taking those highs out now. Now I'd like to see the highs get taken out tomorrow, return back into here to go higher. If we continue pushing through, I'd like to see a body close above these highs today. Sugar. Cattle, you need to see it. Cattle get above that fair value gap there. That block there. You want to see a body close above that, get some support, or a body close above here and come back into this candle to find some support to go higher. That's in coffee, sorry, not cattle. Looking for these equal highs again, back into this range. order block up here for live cattle. Not sure about cocoa. I'd like to see that get further support now and start eating into this fair value gap above you. Why is there delayed? Have I got a delayed status on that? I pay good data for this stuff. It's not CAB. Lean hogs, they're flat. No idea on lean hogs. UNG, talk to me. All right, that's looking better. Good, nice upside objective. Getting closer. All right. You want to see a sweep of the highs, do you? All right. We got 15 minutes, 16, 18 minutes left to go. Is there any specific one you guys want me to look at? Well, this is the June contract. Let's get over to oh, I just had my window open for the first time here because I had a bunch of furniture blocking the window. So now I can see. I just saw something go by the window. I was like, what the heck is that? It was this giant black squirrel. Oops. Okay, so I am futures. Let's go with September contract. I'd like to see us come all the way down into this autumn entry here. And see what kind of reaction we get off that on the daily. See if we end up driving through it. Look for this imbalance over here. That imbalance hasn't been filled yet. So that could be the downside objective. Relative equal lows here. It's rather choppy, so I guess we're gonna have to wait and see what we get for 10 o'clock here. Is that the one you got, Abs? Is that the same one you picked up, Abs? I'm just not sure if that's if I'm getting the same one you are. It's either that one or that one. Make sure I've got All right, let's just watch this for a bit. Fair value gap here. We're looking for this to get taken out to the upside. looking for a further run into liquidity sitting right up in here. Suppose you could bring it all the way down into here. Thanks, Ebs. Yeah, set up nicely. Yeah, I don't have a lot of that. I'm following it on ES. I keep trying to chase it down on this. Yeah, I'm in September right now. I had something come up in my top steps, said there wasn't enough volume anymore. So I just switched over to the September contract. There was a message came up on my screen. I thought, okay, it's time to move over. I haven't checked with block or barcode or is it barcharts.com? They'll let you know for sure. Let me just double check this barcharts.com here. Oops. Guys. Have the rest of you guys got a switch to September yet? Okay, looking on bar charts here. Is there anybody else out there who's actually switched over to September yet? Yeah, I think that's what I think it's what Apex did. Let me see what Top Step did here. Hmm. What do you got open interest at, Abs? Okay. Oh, okay. So it's way. I've switched over too soon, is what you're saying. I don't know why I got that message this morning. Low's taken there at 10 o'clock. I'd like to see this get taken here on the upside, and then that order block there get taken. Oops. Get back there. Still in Dow. Let me go to this one. We're in a nice little consolidation here, so I'd like to see this get above this candle's high on a close, and then we'll see how that acts on there. Now keep your eyes on that area there. I'm just looking for this to kind of clear this area. Watch that here. Mean threshold of this candle. You want to see that hold? If it eats through that, we're looking for more of this downside liquidity again. See where it closes in here. Just want to see the mean threshold. It's kind of provide some support here. We've got premium and discount. Go from premium array breaker. Takes out that low. Discount array. Takes out this high. Breaker to breaker. Mean threshold to mean threshold. So I want to see if this one gives away now and goes lower, or this one gives away and goes higher. Now what we could see is this, because we're inside this small range here, you have one fair value gap that's pretty much holding it all together. Split it in half, and that way you've got your premium and discount side. See how we're just running up into the bottom of this one and we're inside this fair value gap. We're going to trade inside it till it makes a decision to start working the premium of the premium portion or the discount of the discount portion. See how we're kind of just banging around inside that fair value gap? If this was the mean or consequent encroachment, which it is, premium, discount, see how we're kind of just ran up, ran down. So we've gone from discount here to the premium, back down to the discount, back to the premium. We're stuck in that little, inside that fair value gap right now, in the middle of that range. So we're going to see it break out of here first. Come back below into the discount range again. Looking for a silver bullet. Here's the 1010. Some more downside. So we're eating right through that mean threshold now. Lows are taken. We're aiming for the lows, obviously. All these lows are now swept. If you're using that 10 o'clock fair value gap to go long, you just got taken. So I'm not a big fan of that the very first one you see, unless you're in a really definite direction. You've swept some lows. I do like this idea of sweeping these lows now and start returning higher. Maybe more down here. Let's have a look at a 5-minute chart here. There's more down here. Triple lows here. This fair value gap fill is right there at 58.1 or 5.81. See what kind of reaction we get in here. Says there's a huge gap right here. Oh yeah. We can just call that the in order for us to start really digging into here, you want to see this give up this order block right here, this breaker. Takes out this low. Takes out that low. One, two, three, four, 5 candles. That would be a that'll put us right in the middle of the 50% of that regular trading hour. Yeah. And we'll see how it reacts off of that. So if we close below here, then we're looking for a fill of this further downside. Let's look at ES here. That's filled. I'm on the wrong one on the other one. Morning, Hans. So we're inside the breaker and we have this fair value gap in here. We're banking off the consequent encroachment of this. There's the mean threshold or consequent encroachment. Looking for downside to get through here. Breaker is going to be gone. So let's trade below through here now. Here's the 50%. Now you're looking for these old highs here. Coming down just to go up, I agree. Looking for that. We want to see this whole gap fill in now. Now we wait. Now you just get all sniper like. Put on your bug spray, lie in the grass, and wait. I'm surprised how fast these people can come in and put hardwood floors in through your house. Literally 3 days. They did the entire main floor. And we have furniture and all that stuff. Piano, they had to move all that. It's crazy how fast these kids can work. And then you see them pick up this big cabinet we had and take it downstairs for us. And their lifting techniques, holy smokes. I looked at his back and I thought, oh my God, he's going to blow his back. Like nobody uses their knees. You just got one of those strong, young, youthful backs just bending straight over at the hips and just reef this thing up and then carry it down the stairs like it's nothing. My wife and I looked at him and we're like, I'm just shaking my head going, now there's a young, healthy spine for you. And Aaron, if you're in today, they got to see my office the other day, and we're talking about the charts. And it's always something people get interested in, right? So we can direct them towards some ICT free knowledge, some free learning, and come here. And this is where we start to apply it. Watching the market, candle by candle. And just waiting for the setup, waiting for that opportunity, right? So I'd like to see it break this candle's high. See where this closes. See where it sits on a close. You have a swing inside this range here. So if you go from the nearest candle here on the swing, you're just about to hit 50%. This is the 30 candle. We're going into the crazy Ivan moment. This is where you want to see it turn around, look back, and then start continuing higher. Not close the body above here yet. You didn't get an opportunity to get in on this or this. So that's the upside objective inside this range, if you can get an opportunity to get in down here. But the fact you didn't get a chance to get in there, and you're not getting a chance to get in here just yet. Wait for your ideal setup, man. If you don't get it, just wait. There's another hour coming. $10.22 and $10.23. Yeah, one here, one here. So you want to see the first, if we get traded through one and don't get back to it, you trade through the second one. You want to try and get that one. If not, then, and you trade through the order block that initiates that little run. So that whole candle, we have to trade above that with a body and then trade back into it to go long. And unfortunately, your stop's still going to go down here. So when you start getting above, see how if we get above here and we close above that, we're already at that 50% of that range already. So you want to get a discount. So you want to see it come back into this level here. Stop loss here for a run back up into a higher range past 50%. You don't want this to end up being one of those bull traps where you did not break that high with a body. You just got a wick above it and it runs all the way back through this and then finally comes back and fills the rest of the gap in, and we end up getting a price leg down. So like if this was the price leg down to there, that brings us right back into this discount here. So there's your return right to this one here. So if you go long from there, you're aiming for that spot there. But you want to see it start getting some legs and getting out of here quick. So that's your first fair value gap abs that you were looking for. 1022, 1022. That's filled perfectly there. Order block, just hit the edge of it. You want to see this get some intention to get up here now, like get some legs. Don't dilly-dally here. Otherwise, be cautious that we're not just going to come back into this deeper range here. And then the question is, now that you've taken out this little swing point here with a wick, and we've created this fair value gap, do we trade below this? And now you're in that range where you go, here's a premium, here's a discount. If we get below the discount one, obviously we're going to run back further down. And this is potentially the next price leg down. So bear the bull trap. Be careful that you're not caught in a bull trap, so that you want to see this. For me, I want to see that candle get closed above to go bullish. So your best trade entry is right here as the potential entry for long. And if it fails, your stop loss is really small. It's very close. We're digging into this one here now. So now you're really getting into the discount one. So now you want to really see it go. 1, 2, 3, anywhere inside these three entries, you want to see it blow through here and get on top of this fair value gap here. Close above that. Yeah, I agree, Abs. I could still see this coming down into this breaker here. Takes out that low. You want to really see it get above here. It gets some intention now. You're validating this order block here. That's a little bit of padding on the longs. That's what you want to see. So we're still not closing above it. Eight seconds, it's good. Sign here. Absolutely clip that right there perfectly. Painter down to one worker now. Did you still use We still got more. Now we're in this consolidation here. Our stock really haven't we're kind of waffling here now, right near this, just above the 50% of that regular trading hours gap. You're at the mercy of a consolidation right now, so you'll only see this continue to the upside, get above that candle. If not, we have a run back down. Take out these lows. We get through this, below this line right here. And we're looking for obviously more downside. Morning, Derek. Your golf course must be getting really busy now, hey? So we've taken this high, got a reversal here. Trade it back up above it, below it, above it, below it. Over 400 tee times in the last few days. Wow. That's crazy. You got a full 18 holes there? You're not sitting in one of those little half courses. I would assume you're in a full-on 18 hole. When are you going to try out for an open qualifier? Does it sound really low again? Let me check my sound levels. Yeah, it does seem kind of low there. Here we go again. Let me get these over here out of your way so you don't have to worry about that soft system. Sound. Oh, you're going to hear some power now. That's gonna, there's some power for you. I just cranked it right up, so you guys should hear a ton of, be way better sound for you now. Two 18-hole courses in for stay and play, folks. It's kind of low. I turned the mic. You shouldn't have to turn your volume up now. It should be way up there now. Yeah, I found the master volume. Went and readjust it. Now, now leave it there. I've 100% maxed out my master volume, and now the OBS, I'm actually set that down so that we still have another ear piercing level we can get to. I see we're like right out of the red lines here, so we're sitting, see how we're like maxed out right near the red line here, and I still got lots of volume I can crank up, and for all of us hard of hearing folks. For every, yes, it's because I had to reset everything that we've got back to this level. So hopefully iron out the bugs. Once I get this camera set up again, then we can, we'll be all set and ready to go. Your sound is too loud. Turn it down. Now you guys can finally take your speakers and actually give them a break. Yeah, you've got bearishness here. Yes, I sorted out my volume issues now. We're getting there slowly but surely. It's almost a year, and the bugs are almost sorted out now. You said I wasn't slow and consistent. YM is setting up for reversal, says Russell. Oh, yeah. That's a nice little reversal right there. I like this as a reversal, actually. $11 looking for the range. Looking for that range now to fill in between 10:30 and at 9:30. Looking for 50% or more. That range, if we can get back down into, now if we do take out this low, look for the reversal into 11 o'clock, back into that range again. What was that September contract there? You are right. It was a September contract. Thanks, Abs. Let's check again. Still holding right on that fair value gap right now. Watch the bodies. I would like to see that the low get taken out and then the reversal happen. Look at the lows now. What does this candle do? It doesn't make mark up, but then it's heading down to, in my opinion. Is that for Dow you're talking about, Derek? Yeah, there's that little imbalance right here. That's my line in the sand right there for Dow. And you want to see that kick back out of here. Closed above it again. So between this one and this one, we're just coming up into it now. So obviously we need to get above here. In the range, we need to get above that one, find some support and continue pushing higher. You are in the Dow. Same kind of situation. You want to see your low get taken and then run back into the range. You want to see that get taken out on the upside. You might get a very similar thing that we're just seeing over here in NASDAQ. See how this, we just dip below that low, that significant level. Just dip below it and start cutting back up into the range. That little inversion, just dipping below it. Now I want to see it start getting back up into here. If we don't take this low, then I want to see this get taken out on the upside with a close, and then find support at this candle and continue higher. We're getting above this now. Gone from the discount array through the premium array, and that's what I want to see. Close it above it and then start pushing up higher into that premium array up here. I've had to weather all of this. I got in right around in here to go long, and I've had to weather all this with a stop loss sitting right here. Dow's giving us what we're looking for, so we want to see this close above here now. And watch this candle right here. We've got above it. Find support at it. Want to see that continue on the upside now. If not, then we're going to have to we've just hit the mean threshold of this last up close candle. So you want to see that's the line in the sand to hold on to for your bears. Like this was the line in the sand down in here. That's the line in the sand on that side. So you're in that consolidation. So if it rolls over and comes back into the consolidation again, then you're back down into this candle and this candle here. If we can trade a body above it, which we did here, come back, tap it, and go. You want to see that continue to the upside. And again, that's our upside objective. And Dow, it's now giving us exactly what we're looking for here too. Trade it up, come back, find support, and we're looking for further upside in Dow. Again, you want to see it get through the premium array as well. So if you're looking at that small range, there's a discount array, there's the premium array, and that's the ultimate candle that takes those lows out. That's the breaker. So you want to see it get through that, find some support with a body above this, find support at this candle and push higher for these equal highs and back into that range again between the 1030 and the 930 candle. I'm gonna get one in here for ES because I'm not Let's move this down in here so we've got some we'll do 1 hour here, 5 here, 1 here. So you've got your, in ES, you've got a nice little reversal here in ES as well. Let's see it sitting right here. There's your order block. If you trade through it, look for the order block to get taken. If it doesn't get taken, look for a trade back into that fair value gap. You don't get a chance to get in on it here. Unfortunately, you don't even get a chance to get on it there in a 1 minute. So if this does come back and retap this, I'm going to look for the discount portion of that range first. Ideal entries here for a long. If we get that fair value gap down here, the consequent encroachment of the hourly is still at 14 or 4 or 5413 ish, 12, somewhere in there. So inside this range, if you did manage to capture or did take that as a long, look for the range, 50% of that whole range, and then start paying yourself on the way up. If you do get a return back into here, that would be a long potential there. This is just rolled over, taking out the highs. So if you had an opportunity to keep this long here, inside that range, pay yourself at the rejection block. You did not get the old high, so now you've got triple high sitting up here. Look for a retracement back into 50 to 62% of the range here, which is back into this candle. Yes, it's looking good too. Explanation, I hope when turning the path higher, stepping stones, like you said about engineering breaker to up from one price gets to a next higher one. So look at your fib here. There's the drive down into the discount array. 79% retracement is a full fill of the fair value gap. I want to see this wick right out of here now. Watch to see where this 8 seconds, 7 seconds, see if this wick pulls all the way back through here. Or we're closing below this. Okay. So 11 o'clock, silver bullet for a long. You're looking at this as 11:05, 11:16, 17 brings us back into that potential silver bullet long. You want to see this get some legs here now. It's got to get above that level again one more time through here. There's a little one sitting right in here. We haven't really, I don't consider that really a significant low. So this I'm just looking at as a potential just a deeper retracement back into a 69 or 70% retracement back to that old fair value gap again over here. Hit it, pop through here and start pushing for these equal highs to run back up into that range. Otherwise, we're still inside this smaller range here. I want to see that hold though, and we got this range here. So you've got premium, discount. So you want to get on top of this one, which is your equilibrium one. Like if I pull the fib tool from here to here, look where 50% sits. So just keep your eye here because this one hasn't been validated yet to the upside. And this one is not validated to the downside. So these two are just sitting here waiting for some validation. I think this one finally just clipped it now. 3, 7, 3, 7, 2. Nope, not yet. So we're banging off that one and this one. So just hit it perfectly. Bang, 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 bang. Inside that range. So now you're waiting now because you're in a consolidation. We want to shoot for that, but we're stuck in a consolidation. And if you're looking at these little mini ranges that you're in, when you're in a consolidation, you have to change from trade from PDRA to PDRA inside the small range that you're sitting in whilst you're inside the consolidation. So in other words, you want to see line in the sand right or the bottom of your fair value gap. You don't want to see that close below that. Otherwise, we're looking for these lows again and digging back into the breaker. So we're back to this. We're through this again on the downside. We're coming back, finding support at it. So now that's the discount portion. Now you're looking for, see how we're finding support off of here? So more downside, take this out before going higher. Yes, let's come right back to your fair value gap here. Let's come right back to that. See how it's just closing right on it? It's refusing to make lower lows right now. Now, making a slightly lower low. NQ, making a slightly lower low. Oh no, it's a higher low here between 11, 11.19, 11, 11.19, higher low, 11, 11, 16, 17. So we're making a lower low here, higher low, and higher low. So whether that's these guys just taking a run on liquidity here to go higher, to get back in sync with these. Yes, slow and messy. We're still inside these two arrays, banging around off of them. Congratulations, all those subscribers. We're up to 835 people. Who would have thunk that in January when we only had 77 people beginning of the year? Now we're 835 people. Congratulations to you folks. The community, you're building an awesome community here. People, lots of people, like-minded people getting together, sharing ideas. I love to see on the Telegram. It's grown its own life now. There's people regularly communicating in there that bouncing ideas off of each other. You found your niche of people that you like to hang out with, which is great, and sharing ideas. That's what it's all about. So I love to see. When you hit 1,500 with enough views, you should be able to monetize the channel. That's all you guys need to start seeing commercials. But that's where it goes. That's where it goes. So it's just banging right off of that here. So let's think about this. If you're going into that lunch hour and you wanted to take out a low or a high before lunch and then go in the opposite direction, it makes sense that we'd want to see us come back to this breaker and or fill in this fair value gap or regular hours trading before going higher. Or the reverse scenario is we run all the way back up into this consolidation, CAM model 1 entry or 2. We can get right into the middle of it. CAM model 2 for reversal, then take out all this stuff and fill this up on the way down. What say you guys? What would you be looking for? You can see start going a little higher now. You're looking for this fair value gap up here, Tommy? Or this one? Which one? What minute candle are you looking at for a short? $19.612 ish. Oh, up in here. Okay. you see how we've really worked this discount array here in terms of the range. We ran back up, hit it again, so we've hit the top, start digging into the consequent encroachment, the bottom, top. Now I want to see it climb above here again. Find some steps on here now. Use this as a stepping stone, and then use this candle here, or these equal highs, as a stepping stone to continue pushing higher. Yeah, that's the one. That's the one, Tommy. Bottom of the hour. Guess Michael's been kind of sick lately. I had that stomach bug from Vegas. Now my wife not feeling good, and Michael's going down. I wonder if there's just a bug overall that's taking people down right now. I hope you all are safe out there. YM's about to go north, he says. Holy. That looks like it provided a level of support. We're looking for that low to get taken out. It didn't. Traded back up above that fair value gap. You're looking for this here once again, get to trade above it, and you traded above it here. Good. Order block here, reversal, traded above it here, this one here, traded above it. So you've got all these confirmations below these swing points to look for continuation of the upside. So yeah, I like that. You got over $1.02, eh? Yeah, they just finished it, Fiddlesticks. They just finished it yesterday. The place looks awesome now. And it's amazing how much sound you can hear. Everything, the carpet just really, I could not believe how much carpet dampens down the sound of a room. But it sure is cleaner in here. There's not as much dust. Now we're clean. I was on a dusting spree yesterday. I got those little Swiffer dusters, they're like little magnetic things. I thought, well, I'm going to try that out. And man, they're like little dust magnets. I went ripping around here, dusting everything. Cleaned up everything. I'm trying to get all the computer screens back up. I've just got them lying on my table here, but I'm right up against the wall, so they're just kind of resting up against the wall. I've just ordered new brackets Like I've got a 6-screen bracket coming. I've got a painter in right now who's painting the kitchen cabinets and doors and trim. He's doing all the trim. My cousins are coming in from England, so we're trying to get the house looking reasonable. All the furniture comes in. We have all new furniture in the kitchen coming in, all new furniture in the living room, dining room. That's all coming in. It's been like a major reshuffle. I think it's just a fancy way of my wife getting rid of all my back in my bachelor days and my leather couch. She's finally got a nicer couch, and she's decided that we got a designer in that kind of did a design on the place, so it's all looking kind of is better. We got more. Gonna do a pearl finish on the fireplace yet. It's been painted. Drywall's all finished. It's just painting and tidying up now. All the major stuff is now done as of yesterday, which is really nice. And boy, does it ever make a difference when you got that whole linoleum floor. Remember when they did the linoleum right up into the kicks underneath the counters? They just folded the linoleum across the floor and up and underneath the counters at the bottom. Oh man. So all that linoleum is now gone, covered. They put subfloor in the top, over the top of it, and went to town. Those boys were quick yesterday. So we're looking, that's where you've got the, I like these highs. We've broken above the high here, come back, tag it, and continue pushing for these highs above you here. You're going to start to get back into this range. Look for this upside objective here of 38,621. Look for up here, and if you're looking for premium discount range, look for this one in here. So you've got this one, for a run back in here. I'll say a really good break-in structure would be a break here to get a confirmation that you're really going a little higher again. So you want to see these highs get taken out, and then with a body, and then come back, find some support at that, and then really start pushing up into this range here, running for liquidity above the market in here, and this breaker right here. We take out these lows on the hourly. We can get a return back in 637, and then 63 or 659, 660, anywhere inside there, mean threshold. You want to see that get taken to the upside, and then you want to clear that out, and then we have a reversal happening here on the hourly. If not, we just come back, hit this, and we roll over and come back down again, all the way up into the consequent or the mean threshold of this breaker. If we can get support off of that, it rolls over and comes back down again. That's where you can allow yourself for upside. So in terms of upside objectives now, you want to see this continue to run back into this range. Be careful that you don't, and look for constant opportunities to see reversals coming back down against you, like just running back into that fair value gap just above this high on the hourly in 38,557. So if it just takes these highs out here, rolls over and comes back down, we could just see this and a continuation on the downside. So just keep your eyes open for reversals here. And if it's not, if it just keeps running back up, look for an old low, look for consequent encroachment of this fair value gap, and then look for the high. Those are your upside objectives. And keep in mind, you're always looking for, every time a new objective has been cleared out, or any chance that there's a reversal coming back down. If not, keep getting that stepping stone thing we were talking about, the climbing up. find supports off of breakers, and continue pushing higher. So you want to see this breaker. See how we've eaten all through the mean threshold of it now? I like that. I want to see that continue eating above, and then use this as a leverage point to continue pushing higher. ES, look at how ES held perfectly inside here. What a beautiful entry right there. So those of you who are watching ES, I think abs, you really like to watch ES a lot. So ES would have given you a really awesome entry for a long. Stop loss sitting here. And we mentioned this while you were while we were here, that your stop loss would be pretty small. You've broken these highs, so you're paying yourself at these old highs here, equal highs, and now you've got some good break in market structure where the body returned back into, this is a mitigation block. This really didn't take out anything here. So you want to see it can come all the way back into this one here, which is the breaker that takes out this low, and didn't quite take that low, but return to it here. Now I want to see this get a little bit of support off of here. We could see a run back into this little imbalance right here, these equal highs again, before going higher. Yeah, you're right. Abs, that was a beautiful setup right there today. Beautiful setup. Wicking the consequent encroachment. I wouldn't consider that bullish confirmation. Wicking consequent encroachment. But it is bullish encouraging if you're wanting it to be bullish. A close below the midpoint of the candle body suggests going lower. Sorry, I lost you there, Derek. I'm not sure when you're talking about wicking the consequent encroachment. Did I mention something about wicking a consequent encroachment would be considered bullish? You have to take me back to there. I just read your message now, so I probably missed where it was I was talking about. I want to be clear on what it was I was talking about. And if I'm wrong, I'd love to have an open discussion about that. I agree with what Dee is saying. Would like to see these highs taken out now and have close above these highs, then back and touch the highs to go higher. Okay, was just trying to understand your thought process. Oh, it's between Abs and Derek. Okay. Oh, Russell. Sorry, I was addressing Russell's comments. We're in the fair value gap, D, now. I would like to see that go higher. And you're in the Dow again, because I know you're a Dow kind of guy. Okay, so see how we've got these highs taken? And we've got equal highs here, but look, watch here. See how you've traded below it? And I want to see, and I've got a body that opened right on. I want to see this close below this. Come back up, find some support off of this candle here to go short inside this range. If not, be careful that this is a potential short-term reversal back into here. Looking at 50% of this little range here. If it does come back there. Otherwise, I do like the opportunity for this breaker here to provide some support. That last up close candle in this swing that takes out that low and that low. This candle here. So this would be a nice place to just come back, tap it. But don't forget, 50% brings us straight into this breaker right here to go higher. So I want to see this. We're still without a body below there yet. We're still sitting on it. We're below this swing point. So there's the reversal right now. We've just come back up inside it. So for me, in order to go bullish again, you want to be above here. Above 38,535. Otherwise, we're looking for another continuation down into the 50% range. Sorry, Derek. I jump in on the wrong conversations there sometimes. Like, are we talking about what I was saying? So anyway, that was you and Russell. Gotcha. So we're back to the breaker. We're just about to tap it there. There. Got the breaker. Now, how are we going to react off this? So watch the 50% now because we're digging into it. So here's the, so you saw the reversal happening right here. We saw optimum entry right there to get in. Well, optimum entry's there, but you have the consequent encroachment of that, which is right here for a short back into that range. Here's 50% tippy tappy. Now get out of there. You don't want to be sitting around inside here. You want to see this stay open. And let's kick off of here now. We could see a full fill of that, which is the bottom of that breaker right there. And it's a 42 candle. So this one should go back up again 40, unless we start going 45. So 40, 42, this one's the low. We should start seeing the candle push back up 40, 45 now, 48, and then 50, 52. So looking for, there's the 44, beautiful, right off the 50%. Now let's see this go. Let's go. Let's get it up there. Let's get it on. Come on down. Let's go. Now that will turn out quite nicely if that's exactly what we're calling. Back to 50% breaker. And now we see it crawl out of there. That would be lovely. Abs, are you in this ES, by the way? Did you manage to catch this one? That's a beautiful entry there today. And this is really cool because this is like, that's the science of it. That's the algorithm. But what's the psychology of it? How many people saw? We were talking about that while it was forming. But how many people were like, yeah, I'm all in on that. It's the algorithm just playing out. Or did you all go, oh, I'm not sure? And you second guess yourself. Same with NQ, right? We have this guy here. We come back multiple times, tap it. That the little piece there was the little squeaker. Just comes back into the mean threshold of this last down close candle on a swing. You got to give it some wiggle room. That's the wiggle room. Stop loss is sitting here. Come back up. Found support at it again, and we're still pushing higher, and we're looking for our upside objective here still. And man, I've been weathering the storm in this thing for a while, but now we're finally in profits. So if I get up here, that'll be a nice little profit for the day. That's in my top step account. So he says, I would be willing to enter in a buy on the Dow below that equilibrium. Yeah, I'd like to, I agree with you. If you could get below there, I'd like to see it stay open for a bullish. But because you want to get in, I want it to go below there for you, buddy. You want to see that as a breakaway, right? That gap to stay open and start pushing higher. Because right now, all we've done is just come back from this little run up. We've cleared out the highs. We've got our reversal back to the 50%. Now we're coming back up here. We're retesting this level to go shorter. So inside this range, you want to get a real discount now. So where's our discount? I would say let's get back down into discount Sally here. $495, $490, $495, $490. Yeah, that's the full fill for sure. That's the next breaker inside this guy here before taking that low out. So we could get that run back into here. That candle's body is the pretty much the low of that there. So that would be a nice little treat, Derek, if you could get that. $38495 and 384, yeah. Yeah, agreed. That guy's sitting inside that guy, so I would take this one here for that rundown. Actually, it's this. There's a swing right here that doesn't take that low. Either way, I agree. That's an objective that I'd like to see you get. Technically, I'd like to see this stay open for bullishness, but because we want Derek to get involved in this, we want him down in here. We want to give him a discount, so I want to see that close. But a stronger bullish setup would be to see this stay open and see it run back through here and then continue climbing higher. So there's your premium, there's your discount. Oh, we're just kind of creating a new cam model here. This should be cam, cam, cam. And all of a sudden dip down, take this out, come back to these old highs right here with a wick. Then run back up through it. Get your cam model, one entry for a continuation to the upside. Gets us into a 15-minute order block, you said, hey? Yeah, yeah. That looks like that's been hit. Looks like it's been hit already there, Derek. Yeah, it's been hit. Order blocks validated here. We've come back. Didn't quite get it here, maybe. I don't know where that, what's the low on that candle? 498. High is 498. So this kept order block hit it here. Came back, validated it. This one validated it. This one came back, clipped the high. Came back, tapped it one more time. And now you're looking to go higher on a 15-minute, if that's just an order block. If we do manage to get down into the mean threshold of that, that'd be 480. Otherwise, I'm looking for that, sorry. Continuation through here. Old highs getting reinitiated again or retested again. They've broken up, come down, tap them, tap them. You really want to start getting some lift here now. Yeah, I agree with you, Derek. There's a lot of chop in there. Holy cow. I'd like to see it get back into this 38.6. 38.6 big figure here. 600 level. So there's a little tiny imbalance right here. Look at that, around 599, 597. I'm going to put some sticks across here. As an upside objective. You're not out of hope yet there, Derek. We're just coming back up and just still looking bearish on this right now. I'm not bullish on this just yet. I'm still bearish inside that range. All the time we're still below this fair value gap, I'm bearish into this small, back into that range. So you may still get your equilibrium at least. If you pull your little fib tool right here, there's a discount array here. What's that sitting? Is that in the discount area? I think it is. Yeah, just below into the 62%, between 50 and 62%. So we can go get fed there, Russell. We're in lunch hour, so I went, I took some profits and just moved to the sidelines during lunch hour. This is really weathered a whole bunch of stuff in there. It's like, well, it's not really running for the area I want it to, but now it'll run now that I just closed out. But I had a little bit of profit, so I'll just move to the sidelines and wait. I wouldn't mind seeing this run back into this range now here. And I'm with Derek. If we can get ourselves into a discount inside this range here. This guy's in a discount run. This guy's flat. And this guy is flat as well. So two flats and a discount. See how this one's given us a reversal? This one hasn't. We're just marking time right now. And NASDAQ marking time. We haven't got a reversal here either. So typical lunch hour behavior. And if you take your fib tool from high to low, look where we're sitting. We're right in the middle of this range that we've got here. We're right in the 50% of it. Now remember the 11 o'clock, 10:30 reversal into 50% of the range to 62% of the range. Look at that, 62%. Body's respecting it. And now we're getting this slow degrade back to 50. So ideally, I'd like to see this kind of run back down. We've hit the 62% that we're looking for in the range at 11 o'clock. So we may not reach that high objective. So now we're looking for we have no setup for a reversal. So you wait for after lunch before we get something cleaner. Where's the carrot? Yeah, let's throw a carrot in here. I'd like to see a Monsieur Carrot get down into here. Still discount. There you come, Derek. We may just get you, buddy. He's demoing it if it goes there. Ah, yes, I agree. Where's my demo account? Yeah, this is my demo account. I'm with you, buddy. I'm fully demoing it with you. My entry is going to be down here. $38,479 all the way down to $38,471. Okay, Abs, man. Have a great day. We'll see you for the Friday show. We'll see how Friday goes. You have a safe day, man. Stop at 38,475. There we go. Oh, I didn't get my entry. Crap. Stand by. Give me my entry, you little munchkin. Oh, this may not be able to. All right, my stop will go down here. And we'll see where that closes right there. No. She's gonna go lower. Look for this guy here. That's the wiggle room. Nope. Let's go on. Ah, crap it. It was a tip. I took the wrong thing off. It's taking out the lows. Now you want to see a reversal, Russell. Look for this 1030 low to get taken out now. Yes, I didn't put it. I got all my real money out. Just move to the sideline and wait. Now we're looking for these lows. I tell you, my chair certainly runs a lot better on this new floor. Look at the plastic down there so it doesn't wreck my floor. We take that low. Yep, we just clipped the low there at 11 o'clock. I'd like to see a body get down in here though, not just a wick run, because it's relative equal lows here. You'd think the ES would take out these lows here as well now. NQ, got the bat, I got the carrot. That's good. Now we're looking for one above here. You're closing above here, so you can get back into this now. On the Dow, you can go long on this now. Inside the larger range, look for this. Mind you, there's equal lows here. You want to see it get above here, find some support on this to go higher. You have the reversal here, fair value gap. Body trades above it, come back, find support at it. You want to continue pushing higher now. And you're in the premium portion of that range there already, so remember that. Not that you would take this right now because we're in lunch hour. Because we could revisit these equal lows here. So you want to see it take out this candle's high on the downside for this to continue coming back down here. Tell me my I was getting some warnings that my battery was running low. Like, what? I can't be out of battery. Darren, have some stuff that may benefit you and other members, but need to show a visual aids chart. When is the best way to connect? TP, you can go on to the Telegram account, and you can find that in the description above, right, in the channel. And pop into Telegram, and you can DM message me there, or you can just, if you want to put it out there for everybody, you can post it right on the Telegram channel if you like. Whatever your intentions are, whatever you prefer, then that is the opportunity for you out there. So see how we've run all the way back. We've traded above here. We've traded back into that level again. We've tapped the mean threshold or the consequent encroachment. So the swing is still in play to go longer inside this range. You got the fair value gap above you here. And then in the higher range, you got the premium array above you as well. So much like we're looking for in NQ when we're looking up here in the premium range, this guy here has provided a level of support again. How many times has that provided support to you? Now you want to see it start working its way back up here. Don't forget, you can still take out this low, take out this low. We still got the breaker below us here. Pull your fib tool from bottom to top. This is lunch hour, remember, so you got to be super nimble inside here. So like Derek was saying, if you're going to take this, take it on a discount. Anything below here, there's your discount. You get up to 50%, move to break even. You get to 62, move to 50. Comes back, takes you out. Move to the sidelines, wait again. If it comes back in here, you can start your play all over again. You got a little buffer here now. If it runs to 50, move to break even. 62, do the same thing again. But make sure you're in that discount range first and keep your leverage super low. So right in here, that's the discount. Out of all indices, is ICT best used for ES, Forex, NQ, or can it be applied to anything? Anything. It's algorithmic. Literally anything. Stocks, bonds, you name it. All this stuff will work in all of it. We were in commodities this morning talking about commodities. So the countertop guy, yep, that can be used for anything. Forex. Oil. Look at this on the hourly on the oil reversal. Nice reversal here. Come back up. Reclaim it. Drive all the way down to the discount array. Perfect run into the discount. Premium to discount. Right on the edge to right on the edge. And then ran all the way back up. Reversal right here. We've come right back into the reversal again and now getting a reaction off of that. So you're looking for these equal highs here now. I want to see it eat through that candle and start running for these equal highs. That's oil. This is some random account in Canada. So this is an ETF in Canada. So countertop. So you can see an idea what it looks like. These lows are taken here. You see a trade above it right here. Fair value gap. If you can't get in on it here, if you don't see this one here, it closed above and it literally opened right in it. That 1147 is your buy inside that reversal. Literally right there is your optimum entry to go long. And you would have caught all that for a couple of months on a run up. Reversal here. Take out that high. You have a reversal pattern. Body trades below it right here. You trade back up into it here for a short for several weeks or several months. These are weekly chart. All the way down into take out previous lows and you get your next reversal to go all the way back up. So you have months worth of it trading down here and months worth of just 2 trades you could have taken there as mega trades. And that's some random ETF in Canada. Here's a bank in Canada. So financials. You have a reversal here. Body trades all the way back up inside it right here for a perfect entry for weeks. You trade all the way back down, take out these lows. Get a reversal. Body trades up, trades back into the reversal. Pull your fib tool range all the way back up. You have a reversal here. Body trades below it. Comes back up into it perfectly there for a short. And you take that. That's financials. Heavy metals. Lots of gold. Here's a reversal in gold. Body trades below it right here. Literally opens on it here, trades low. We have not traded above this yet, so you're still low, still short. That's gold. Here's Bitcoin. Reversal Bitcoin. Body trades below it, trade back up inside it. You get a retest of it, lower. So that's digital currency. So hopefully that'll give you some ideas and some quick references to just a simple thing like a reversal pattern setup. Can you walk through the last 30 minutes of ES? I certainly can do that for you, sir. 30 minutes. So let's take, would you want to see this before we started here? Where would you like me to start? Right at 12 o'clock? Or this consolidation here? So consolidation and model 1 entry here. So watch carefully. Here's your, I'll box it out for you. This is a CAM 1 model entry. So you have low to high. Sorry, let me make sure it's right on that high there. And when a body breaks below this and then trades back into it, we get a CAM model 1 entry. There's your body breaks below, pops in literally with precision. You catch that for a short, back into a discount array down in here inside a larger range. There's your discount, literally precision entry. 1, 2, 3, 4 minutes, and you've caught yourself a perfect entrance all the way down into your discount array here. We have not taken out a low, so when you look at this, it's not a reversal, it's just a change in direction. And then when it changes direction again, it does not change direction again there. So it literally keeps looking at, you take that fair value gap out there, and you might say, well, that's not the reversal. You said a reversal. It did not take out an old low, so it's not a reversal. It's just a change in direction. Then it changes direction again, and welcome to lunch hour. Then we could have finally dipped down, take out these lows. So now what we're looking for is a continuation. Now this low, a significant low has been taken. You see how that fair value gap has formed right here. So you kind of draw this one over here to there and to there. Now you do not want to see it close below this again now. So you watch 8 seconds. If it closes below it, then you're still going to continue going down. And you've got this fair value gap below you here, yet to fill on the 1 hour chart. We're taking these lows out now, so you also have the mean threshold or the consequent encroachment of this BISTI here. Look for that as an area of sensitivity or a reversal. See how we've closed below it right there? So we're anticipating lower prices. If it closes above it, we're anticipating higher prices inside this range. So look for that fair value gap to fill here. There's nothing wrong with paper trading, my friend. You'll never get criticism from me if you paper trade for months or even years until you get your setup. You got more respect from me if you actually take your time to wait for your perfect setups. There's no reason to rush anything in trading. Does that make sense to you, my friend? Literally closing on it. So again, we're in a consolidation time during lunch hour. We've now taken these lows out, which is kind of exciting. Now you want to see something, get some legs and get out of here. We've traded below this. We're banging off of this one. We're trading below that guy. look at this range here. They're pretty much overlapping now. I'll get rid of this one. I'll put that right up to there. That would account for the bodies respecting that fair value gap here and respecting it all the way down to the bottom end here. So now we're just stuck inside that fair value gap for a bit. We'll wait and see. So with ES, it's anybody's game right now. Well, it's more bearish, obviously. You've traded below your CAM Model 1 entry is a continuation here. We had a body that traded above it here, but again, we did not take out an old low. So that's a bear or a bull trap to get caught in. If you get caught in that, here's where you bail yourself out. So I don't know if you've seen this or not countertop, but this is what I call a fail safe. Let's say this is your entry right here. Let's say you looked at this and you said, okay, I'm going to take this as a reversal. Okay, it's not, but we'll say that's a reversal. And you say, now I want to go long on this. So as soon as you see it break that high and you go, great. As soon as it enters back into this space here, I want to go long, right? I want to show you this so you get an idea of what the fail-safe is for. So right here, say you can either say, okay, I'm going to go long there. So my stop loss has to go down here. So when you look at your entry, if you say, again, it hasn't taken out these lows, so I want the ideal entry, which is right here. So you go 1, 2, 3. There's 3 different places you can look for an entry to go long if that's what you were looking for in this particular case. So it came down, you've got one entry there, you got your second potential entry there, and the third entry right there. Then all of a sudden you see it close below you and you go, ooh, I'm on the wrong side of this. This is going lower because we've closed below that fair value gap. So when it returns back into it, that's why this is the ideal place to enter for long, because if you're on the wrong side of it, you get an opportunity to empty or unload your position at break even because it's going to go short on you, or you anticipate it to go short. That's not 100% of the time, but you may anticipate that it'll go short. And in this case, you actually had an opportunity to clear that guy and that guy out first, so your stop loss doesn't get taken. Then all of a sudden it comes back down and says, I'm still closing below, and I did not close above, and slammo. Then it finally gave you a couple of opportunities to get out of the trade or get in and realign yourself to going short, if that makes any sense to you. But that's why I have a fail-safe versus just relying on a stop loss. Because if you relied on your stop loss, you had multiple clues here that said, we're going to come take out your stop loss. I'm giving you all these opportunities to unload your position because you're on the wrong side of this before it finally takes your stop loss for you. I hope that helps. That's what I call a fail-safe. And you'll find those things will really save your ass when you're trying to catch a counter trend trade, and then it starts trading against you and you start to go, oh yeah, I'm definitely on the wrong side of that. You can catch it before your stop loss gets taken. A very small stop loss, like 5%. You think 5% is a little loss? Holy doodle, man, that's huge. You should be only risking 1% max. Even in a paper trading account, don't ever get into 5% trades, because then all you're doing is just trying to impress yourself with really high price, like money. You're focusing on money. Never risk 5% on a trade. Never, never, never. That's massive, massive loss, buddy. 1% and focus on your trade. Don't worry about the paper. Don't worry about the the money, how you can turn a $10,000 account, whatever. You don't want to do any of that. Just focus on your thing. Never, ever, ever 5%, man. That's just my personal opinion. And apparently it looks like it's Derek's personal opinion as well. So right now, True ICT Traders waiting for confirmation. 5% is huge loss. Not sure I understand where you're coming from. 5% is $500, right? Yep, that is $500 on a $10,000 account. Now, if you said to me 0.5%, I'd be like, okay. And Derek would be like, oh, sorry, you just missed a decimal point. What you really meant is you only took a 0.5% hit. If my $100 bet goes, $5,000 discount is, that goes to $100 out of my $5,000 account, it's huge. $100 bet goes to $95 out of 5. That's huge. Yes. 1% on a $5,000 account is $50. That's all you should be risking is $50. Goes to $95. You take 95. Well, that's 2%, not 5%. If you have a $5,000 account and you're only losing $100, that's only 2%. The word bet, that's different than trading. So looking for, now we're passing through the mean threshold, consequent encroachment of that BISI. Now look for a further dig down and look for these old highs over here. Oh no, that'll be a full fill of that fair value gap if that's where we keep going. DeMilo, how are you doing? Sorry, Countertop, we're not trying to make you feel bad, man. But always kind of look at it as, if my position is 10 calls at $1, what is a safe stop loss? I'm confused. See now, to me, I look at this and I go, if I'm looking at the calculation, if my stop loss is going to go, like for example, if this is the one you wanted to go on, you look at the distance. So if I went in for the optimum entry right here, and I want to risk 1% of my account, I look at the difference between here and here, and I say, what's the maximum amount of bet I can put on between 417 and 419 for 1% of my account? And if that works out to $100, $200, and that's only 1%, then when you pull your stop loss down as a, for example, let's do this. I'm just gonna, this is on my, there. See this here? That's $850. So on $100,000 account, that's $1,000. That's less than 1%. So that's where I would hold that. I'd say, okay, that's my maximum I can risk there to go long. Usually ICT teaches 20 to 30 pip stop loss when you're in Forex pairs. In futures, it is a variable stop loss because that may be just below a low or a high, and we're looking for I'm trying to think about how you would. You have to look at where your entry wants to be, calculate the distance between where your absolute fail-safe or your absolute loss is going to be. You're willing to risk 1% of that. So take your tool. There's a tool that you can calculate the distance between here and what you're risking. And then, so when you go into here, you'll go settings, you'll go not instant here. And let's say, for example, I wanted to go, let's say I wanted to do a short here. You go take profit, stop loss. What are you willing to risk in terms of dollars? $1,850. So calculate your account. If it's $1,000, you want to go down to $1,000. That's 1% of my account. So that'll tell me where my stop loss will have to be for risking 1%. If I want to make more than 3R, I'm not into the R factor at all. I just look for a specific discount array and I aim for that. That may be 10 handles away. It may be 50 handles away. It doesn't matter. I don't look for R's. So that's your risk. And if that's your place you want to enter, let's say this is where I want to enter and I want to go short from there. Stop loss would go here. Put your stop loss there. Look at that, compare it, and say that's where how much I'm willing to risk for 1%, and with my stop loss sitting right here. So you'll find the price that you want to put your stop loss at, and the discount array you want to aim for down here. That's what your profit's going to end up being. That's how you risk it. But it's a matter of knowing where you want to put your stop loss according to your trade. Yeah, definitely don't get into the idea of putting 20 handles, 50 handles. Just go one. Just put one handle in. Get yourself a $100,000 account. Get one handle, and that's it. And only put on the minimum that you're supposed to put on. If you can trade in micros, trade a micro at 1. It doesn't matter. It's not about the leverage just yet. It's about finding your setup. And then worry about how to leverage that, how to manage your trade on the way. Right now, you got to find your setup, know your PD arrays, know your setup. If you haven't studied ICT stuff, study the snot out of it. Then worry about all that money stuff after the fact. Really, really important to focus on just looking for your setup. You're very welcome. Stick around, Countertop Guy. It's the ThetaWave Trader. It's about getting into a certain mindset, getting into a calm mindset, wait for your perfect setup, and then get out. Look for your fail-safe. Look for your opportunities to enter, exit. Be confident that you've found your reversal. See how Russell's just chomping at the bit there. There's a reversal going on there at NQ. So we dropped below that breaker. I'd like to see it come back and re-engage it one more time here to go long off this order block here. See that little tiny reversal you're looking at there, Russell? To the body traded above it, and we miss the opportunity. Nothing comes back to it right away, and then the next one proceeds to run through the order block, which is there is a swing here, that breaker that takes out these lows, that little low there. This order block, you want to see it come back to that now find some support off of that, ideally up right off the top of the break or two, and continue pushing higher. And you want to see that stay open. If it doesn't, trades all the way back into it again, then your line in the sand is the bottom of the breaker again. We trade below it, into it again, then this is just a continuation. So there's the tap of the high. There's the break. We want to see that breaker get re-engaged again, retested. So that would be the long right off this guy here. That's one potential entry. So you got 1, 2, and then if you take that one there, look for this guy down here. If it runs through that, your stop loss has to go down here. So if you're doing multiple different entries, again, they should all add up to no more than 1, 2%, whatever your risk tolerance is, right? If you're a professional trader and you've been trading for a long time, you'll know that if you're got a bomber trade, you're looking for 2, maybe 3% of your account. You risk that, and away you go. So there's your first one, back to the order block. So now we're looking for further upside. Did you catch that one, Russell? Did you catch the back off the candle here? It's a tough one though, because when you think about it, you're in that little range right there to there. That's the first swing. You're already well above, or you're right on the 50% right there. Literally catch the 50% and go from there. You're not even in the discount. You're right on the discount. Now you expect to see that go higher. So if you were 50% there and you get to 62, you move to break even. Then you see it go to 70, move to 69, and it ran all the way up there real quick. You would have dragged your stop loss all the way up to 75, and then it came back and tapped you. So you would have only caught that little run from 25. You would have been just short of 20 handles there on that 1 minute, 2 minute candle. You're in lunch hour. That's how you got to run it. Got to be quick. So keep all these factors in mind when you're deciding to enter, even though we saw this as the place we said it would come to. That right there is the trade. It's done. Following that sucker up real quick. And you're literally entering in with a stop loss down here that you slam up as soon as it gets to the 62. You're at 50 and going. And you get to do the same trade over again. If it comes back and taps it again, it hasn't quite tapped it. You would start that trade over again at 60, move up to break even. If it hits 70, you move to 62. So you'd be dragging that stop loss right up behind this right now. 75, right there. Bang, it caught you. Now you're out. So it hit 79%, came back, tapped you. So you're just dragging that stop loss up. Now it reversals and come back down on you again. You get to play the same trade all over again if you get back to 50% or comes back into this candle. And you're just collecting 15 handles, 10 handles at a time. Not that you would actually do this. These are the people that just like the high rollers that just like getting in there and trade. Make sure you're still following logic. And I'm not trying to encourage you to trade this at all. I'm just trying to show you that candles are going from array to array. So if they're a bit tricky, Russell, that's good. Then you just say no. Don't force yourself to jump in on something that you're not ready for, right? Like even if it takes off, the thing you should be thinking to yourself is, yes, it's just confirming it. It's just doing it in a really quick kind of not what I'm accustomed to kind of manner. Wait for the one you're accustomed to. Wait for the trade, setup that you're comfortable with. It's nice to see it. It's nice to be able to still recognize that you can see the trade. But if you haven't got the one you're looking for, especially in time and price, waiting for the optimum time. Did that come back and tag it again? Yep. Came back, hit it one more time. If it hits 62%, you're out of there again. You're right at break even. It hit 62. There's 62. So again, you've hit it again. You have multiple different 1, 2, 3 opportunities to pay yourself at 62%. So you'd be sitting at 62, or sorry, at 50% break even right now. If that runs up into 70, then move to 62. That'll be 7 handles right there. Just watch it right now. Watch right there. Oops. Did I move it? No. 70, move to 62, and you've got 7 handles in the bag right now. A little optimum, a little imbalance right here. You're sitting right here on this now, so watch. I'm going to drag this guy here. Just, there we go. So there's this is your stop loss right now. So you're at 62. I'd move it right in this. Now move it right up to 70. But it tags you right there. You're out. So now you got 40 from here again. That's 30. There's another 10 handles right there. You move to the sideline. So we've taken 20, another 10, this 10. That's 40 handles just inside this crap right here in a lunch hour, watching from array to array, catching here. No, you only got that guy right there. Anyway, it's fun. When you have time, can you talk about the significance of gaps in 15-second candles? The significance is no different than the significance that you see in a 1-minute chart. That's just in a 15-second chart. It's just gapping in price, and it makes it far more challenging to try and keep up with. Don't even look at a 15-second chart right now, countertop guy. If you're still into this, you're still learning this stuff, don't even worry about a 15-second chart. It's moving way too fast. If you're just starting out, if you've been doing it for a while, then ignore what I just said. Yes, my bias is long on a 1-minute chart inside the chart we're looking at right now. So when you ask me for a bias of long or short, note the time that I'm sitting in. I'm in a 1-minute chart. So yes, my bias is long right now, but that doesn't mean to say I'm biased long over on the daily or the hourly or whatever. I am just biased inside this chart based on price action right now. I'm biased long. It would have to get below this candle here, this fair value gap below us here, for me to go bearish. "30-second chart. Let's go to a 15-second chart. You'll see there's a lot of little imbalances that occur here in price. Same setups though that occur if you get a reversal. You take out a high, these highs get taken. There's a little space in here, drop below it. If you can trade back into that candle, great. If not, look for the big one that starts the run. Body trades below it right here. We trade back up into it here for a short, down into the discount range over here. Consolidation. Look for a run into here. So this is for if you understand your price action you're looking for, or a setup that you're looking for, wait till you see it, get confirmation for your trade. If I can't get this one, I can't get this one. Wait for this one. Body trades below it, into it, look for the range overall. And that's your downside objective right here. Anywhere inside this thing is fine. So 15-second chart, my bias short. 1 minute chart. Now you've taken out this, there's no significant high here. We're inside this range, so we're in a discount of this range here. If we trade below, we see how we've traded below it right here now. Body's traded below it. Now you're bearish. Based on a 1 minute chart. Give the mean threshold as your line in the sand. That's your wiggle room and that little fair value gap right there. So if we trade back above here on a bullish candle, on a close, then you're back to bullish inside this range here. We have not taken out a significant low. Yeah, you've taken out these ones. So watch out for a bull trap here. We've closed above this, so now you're bullish inside this range. So you're back up into a premium level array. See how we've just come right back up into it here and we're reacting off of it. So you're between this one and this one. Inside the smaller range. What you want to see now is, oh, see how we just closed above that? Fair value gap, came back in, bullish inside the range. You want to see it close above here and here now. Get above that level, find some support above here. Let me put my little sticks in here so you can see what I'm looking for. We get above that line, find some support at it, start pushing up higher. Then we start seeking external range liquidity. Right now we're internal range in this small little range right here. We just tap it. There you go. Get above this. Remember the mean threshold? That's your dotted line. Line in the sand. And if you roll over here, then you're coming back down into the smaller range. So now we've traded above this. Good sign. come back, find some support at this. Ideally, you'd like to see anywhere inside here or come right back off this one here. Oh, there's a small little balance here, so we might even get back into this imbalance here. But bullish now. So you take these highs now. If it doesn't, this is one of those rejection blocks, and then we come back into the range. But I'd like to see it continue going higher now. Lovely, lovely. Carry on. So the highest taken now. Now we've got the highest taken, so you look for this. This is the thing you start getting a little, depending on where you're looking for your support level now. You want this to provide a level of support. There's the fair value gap. You don't want to see it get eaten through here, otherwise we go down to the discount array. I'm going to get rid of this breaker here now. See how we've found support off the top of the breaker to push higher? Yeah, it also creates that fair value gap below us here. I'm going to remove this. I'm going to put in my discounts. So if you've caught yourself along here, make sure you pay yourself at rejection block. And you'll hear me tell you this a million times. Pay yourself at rejection blocks. If you get the high, bonus. But pay yourself at rejection blocks. How similar are they? Well, look at the difference between NQ. Here's the order block. If we trade above it, you come back into it to go long, right? It actually ran through that one. And you go to ES. Here's your swing. This is a reprice rebalance. There's a small little fair value gap here. You trade back into the imbalance, the rebalance, I should say. You go long, look for this candle here. We traded above it. We come back, found support at it, ran higher, took out this high here, back into this order block, rejection. You don't get the high. Comes all the way back down into that candle one more time. Now it finally takes the highs. Cleaner. It's similar. Setups are similar. We're looking for the same kind of principle. Let's look at the Dow here. Dow takes the lows. We trade up above. We break some structure to the upside with a body candle. You trade back into the candle to go higher. It's another setup you're looking for. We have a break in market structure to the upside with a body close. You come back, find support at it. You look for further upside. If you're not happy with that one, and you say market structure break for me would be something above these, you look for your high right here. See how the body breaks this high? You come back in it, find support at it, and continue higher, aiming for rejection block, old high, disc premium array. Rinse and repeat all the time you're going in that direction. What's Dixie up to? Gap. Trade through the gap, back into the gap, go high. You don't get an opportunity to get in on that. That's why you want this to be a acceleration, breakaway gap, measuring gap. You don't want it to come back into it. It just comes back to the edge of the, oh, it doesn't even hit that. Yeah, it does. Just catches the edge of the imbalance here before going higher. I think that's going to be it for me, guys, for today. I think I'm going to try and get out there and enjoy some, is there any sunshine out there? It's like some clouds, might be some sunshine. What's the temperature going to be out there today? Ooh, it's going to 21, 22 degrees today. Lovely. Ooh, the bee habitat. I'm excited for you, Derek, man. I think that's going to be fun. Derek, the beekeeper. Do not mess with the beekeeper. So again, we're looking for a higher run back up into this range here now. Look, pull your fib tool, get on. Ideally, I want to see this get on top of this. Start really climbing back up into this range here and start reaching that higher objective we've been looking for a while now. You might have to come on here afterwards, Derek, and start selling some honey. We're going to have to come up with a really cool name for you. It'll be like, welcome to DC's Trader Honey, where all the deals are absolutely the sweetest. I do all my trades with DC's honey in my coffee. It makes all my trades oh so sweet. You want to get the best trades, get the best honey, my friends. Derek's DC Honey. Come for the carrot, baby. Come for the carrot. Come get you some. Oh yeah, we're back in profits again. I got long on this, by the way. Never take a trade without spoonful of honey. Yeah, so anyway, that's our upside objective. I'd like to see these this old high get taken out here on the old grandiose scale. There's still that little piece of that regular trading hour gap that hasn't been filled yet, hey? So we got this high taken. So again, look for your setup. Look for the clean entry. There's nothing super clean here. You're still in lunch hour, or we're at a lunch hour now at 1 o'clock. So we might actually see some acceleration here now. Downside, upside, could be either way. So make sure you've always been paying yourself. If you look at these reversals and you've been getting in on the reversal, good for you. Look at the range you're in, fair value gap, discount array, like array to like array. Pay yourself. And I'll put a little temptation for it to go to. That's have you ever had honey glazed carrots? There you go, my friends. It's Derek's honey glazed carrots. That's what we're aiming for. The sweet honey glaze of carrots. If you're new to our channel, you can hit subscribe. You're welcome anytime. If you want to get in on the afternoon conversations we like to have, we got some awesome traders that really love to analyze the market. We've got people that are starting out, people that are looking for consistency, finding more consistency, finding more peace in their trades. And their setups are coming together. You got some great people in there. I mean, we've got 160 somewhat people in there that are super keen on trading. So you always find yourself somebody you gel with there. And we meet up there after the hours and we look for further opportunities. Weekends, we like to do I like to do a little Bitcoin trading in the weekends. So if you're a crypto trader, I can show you some sweet little trades that we look for in Bitcoin. Dave and I love to do a little Bitcoin action in the weekends. Same with Fernando. So you're welcome to pop in on our Telegram channel and check it out. If you're a new subscriber, welcome. Don't be afraid to have a little conversation on the side. Nobody's ever going to criticize you. If you do, they're gone. Everybody knows the rules. We lead for kindness here and respect for all levels of trading, all levels of understanding. And we support ICT principles, techniques. If you're new to his game, study all ICT stuff. That's the only thing you need to study is ICT principles. I have their 2022 membership or mentorship. Free information online. Don't go anywhere. Don't pay for it by anybody else. Just go straight to ICT on YouTube. Subscribe to his channel and study his 2022 concepts if you're new to this stuff. Then you come here and we'll show you how to apply it. And yeah, and don't be afraid to ask questions. No such thing as a stupid question. Just ask away. And notice how we pounced on countertop there. Hey, as soon as he started talking about 5% of his account. We do it out of love and respect, my friend. Not to mock you or make you feel bad, but talk about risk tolerance and all that stuff. And the psychology of trading. That's what I like to try and focus on that to try and help you guys out. get your trades more in line with how your personality supports it. Anyway, so pop in there, make yourself a subscription if you're subscribing. You can hit the like button if you like what we're doing here. You don't have to hit the like. I don't care whether or not you hit the like button or not anymore. It doesn't really matter. If you hit it, wonderful. I don't know if it helps my stats at all. It's not, nobody's mentioned anything to me about like stats or not, but anyway, we've got great guys in here. They're all, and Russell's totally been like all over it lately. He's been climbing, moving. I like it. Good work, Russell. Anyway, I'm out here. We've got our upside objective for lunch hour. Keep your powder dry. We're getting to the end of the week. Remember, the best weeks are best days are Monday or Tuesday and Wednesday. So Friday we might catch something really nice in the afternoon. Get that glass off time where you can catch some nice, easy, slow algorithm. It's not jumping around too much. We can catch some nice, easy little 10-handle trades. But until then, I will see you folks tomorrow, bright and early, 9 o'clock, hopefully with a camera. If it works out, still got the audio working better. You guys are happy with the audio levels now. That's really cool. So we're kind of, we're gelling on all 4 tires now. We're rolling. Anyway, this is the ThetaWaveTrader, and I'm out. You guys have an awesome day, and we'll talk to you guys later. Derek, enjoy your hive. Don't get stung.